In general, I don't know whether the question is, if inflation's coming down enough for really central banks to start cutting, or whether the question should be how difficult is that last mile going to be to get inflation under control.
So we think that there's clear disinflation trends, and that is going to continue. I mean, the wage picture is certainly a part of it, and a part that needs to be watched closely, whether it's in the UK, and of course thinking back to the jobs data that we got out of the US. Now, US wages had come down to that 4.2, 4.3% range if we think about average hourly earnings. We got that tick up to 4.5%, which is a bit concerning. But again, that could just be part of the January data blips that we've had in the last 4 years. So disinflation, we think, is here to stay. And as an example of that, I was really encouraged to see overnight the New York Fed consumer inflation expectations that showed over 3 years, consumers still think inflation is falling quite significantly.
But great. How much of a mismatch is that with that, incredible employment figures that we had?
Yes, it's certainly a key part to watch. I don't think one data point makes a trend at this stage, and the broader body of data still supports disinflation. We're expecting core PCE at 2 to 2.5% by the end of the year, and we still feel really comfortable with that. The other elements that we're going to be watching within the print later is going to be goods price inflation. We've obviously seen disinflation driven by both goods and services, and whilst it's a little bit early, we still want to make sure that when we think about events in the Red Sea, some of those delayed shipping, that's not feeding through. It's probably a bit early, but still watching goods price inflation. Services, obviously, wages feed into that, shelter as well. But on balance, disinflation. I would say, Francine, though, that despite expecting, CPI to print below 3% later, we still think that the market is over-exuberant when it comes to when that first cut comes in. So our base case, and has been for a while, is that it's June that we get the first cut from the Fed. And we'd view that as a good thing. We don't need to push the Fed, to move too soon. We think they're doing the right thing by waiting until, you've got a firm body of data.